What's up, YouTube? Welcome to the Credit Plug channel. So for today's video, we have a very special guest. We have Patrick from Rock Financial. He's going to be sharing some information about Rock Financial. Now, as a lot of you guys know, we did a review on Rock maybe about a month ago. I have Patrick here. He's going to be walking through some of the details a lot of subscribers wanted to know about, what types of business loan products that they offer, what their requirements are, and a little bit more about the company. So welcome, Pat. Appreciate you, joining us, coming down here to speak with us. I know a lot of our subscribers definitely would like some additional information. So I guess we could start off. Can you talk a little bit about Rock Financial, what your company does, and what value you guys provide?
Yeah, absolutely. And I appreciate, you having us on here today. And, long and short, really what our company all about is really trying to streamline the borrowing process and really simplify that process for business owners as much as possible. You and I had a great conversation earlier where we talked about, alternative lending, which is what we specialize in, is still very new to a lot of small business owners. And there's a lot of information out there that's just, kind of unknown. And you've been doing a great job of bringing that information to the table. And I think that's kind of where we collide a little bit is kind of the similarity in what we're looking to accomplish. And that's just really bringing as much education and information around business finance as possible. So we found, years ago, over a decade ago, that there were many different types of financing options that are available for small business owners. These options are offered out through many different private lenders who aren't your typical, brick and mortar location in your local community. So for many business owners, it's hard to come across these type of institutions. So what we've done is we've basically established relationships with many lenders that offer an array of different types of business financing, whether that be financing for specific pieces of equipment, leveraging your receivables in your business to obtain financing, traditional revolving lines of credit, working capital loans, and even helping out on the SBA. So what we did is, we kind of compiled this marketplace where you could, come to one place, Rock Financial. You can get a dedicated point of contact that will look to understand your business, understand what it is that you're looking to accomplish, and then ultimately pair you with one of those lenders in our network that's going to provide you like that perfect mix of what you qualify for, what your business is currently qualifying for, mixed with what it was that you're looking to accomplish and those goals that you're looking to achieve. So, we just noticed for a business owner to go do all this research on their own, you can very easily end up with the wrong lender that, maybe still gets you financing, right? But maybe it's higher cost or shorter term or isn't really customized to what it is that you were looking to accomplish. So that's really the service that we provide is we try to take that shopping and the mystery out of it for business owners and really bring you a variety of options to the table that you could choose, which would be the best one for your business.
Absolutely. You hit on a couple good points because I know even for, just the average business owner, having to sift through all the different lenders, some might have specific requirements, some might have certain business types that they want to kind of focus on, and that information is not always public. So the fact that you already kind of, curated a lot of these lenders, it's easier to sort of identify where a business borrower might fit in versus going about it yourself through trial and error. So, and that's one of the things that we try to do on our channel is sort of highlight some of these non-traditional types of lending opportunities besides just the big banks and things like that. The next question I know a lot of our subscribers want to know in terms of the process. So what does that look like? I know a lot of our subscribers are worried about is there a hard pull? So can you just kind of walk us through like the process from someone submitting their information all the way through getting funded for a deal? What does that look like? What does the process normally look like in the timeline?
Absolutely, and it's a great question. And unfortunately, there's been this stigma around shopping for business financing, where if you shop in too many places, it's going to have a negative effect on your credit score. And the truth is that we really want to empower borrowers to shop for the right financing. We never want to stick anybody in a corner or limit you going out out and seeing what's out there. So, we built into our process that we do a soft credit pull on the upfront. This allows you to come in and be able to get eyes on an array of different financing options. Again, not just different lenders, but different products. And we could kind of go through all of those different options without dinging your credit whatsoever. It would be a soft credit check, so there would be no inquiry on the report. And then once we start to bring approvals to the table and we move closer towards which product and which lender we're actually physically going to fund with, at that point, all lenders are going to want to do, their final due diligence, and, there will be a hard credit check done at that point. But again, that's at the end of the process when you're ready for funding. The most important part of what I was saying is that, by doing the soft credit check on the upfront, this allows us to see all of the options that are available to us. And I just, it kills me when I hear a business owner say like, oh, I didn't want to look for other options, I was worried about my credit score. That's not fair to a borrower. You definitely want to, you have the right as a business owner to see what's out there and what type of options are available to you in your business.
Exactly, and I know that's a big concern because if you're going direct to some lenders, you may get hard pulled originally, and then that hard pull could affect getting subsequent credit because other creditors will see that hard inquiry. So I know a lot of us appreciate where you can get an offer based off a soft pull, and if you decide to proceed with the offer at that point, then it'd be a hard pull. But at least you get to know what the options are. So another question I know a lot of subscribers want to know in terms of like the different financial products, business loans, business lines of credit, equipment financing. What types of products through your network of different lenders are you able to provide?
Yeah, so we have access to a nice variety, but I also always want to talk about what we're really good at, right? Because we're very respectful of everybody's time, right? That's one of the biggest parts of our process, is making sure that we've streamlined it so that we can get you in, allow you to understand your options quickly, and then be able to make a move from there and not have a lot of wasted time in between. So the products that we do very well are straight working capital loans. When you need cash, we recently had somebody who was looking to purchase a piece of equipment. Equipment financing is more based on your personal credit score. They weren't qualifying, so we were able to get them working capital to purchase that equipment. So working capital loans, equipment financing, traditional revolving lines of credit, and SBA lending would really be our forte. And when I talk about the traditional lines of credit, I include in that, your factoring and your account receivable and your inventory financing. Your inventory and your accounts receivable, your outstanding receivables in the business is a great way to obtain a line of credit by leveraging those receivables or leveraging that inventory to obtain a true revolving line of credit for your business.
Absolutely. I wanted to drill a little bit more into some of the specific data points. Now, I know with different lenders, they might have different requirements in terms of, credit profile, credit quality, income, business type. Now, if you could kind of give like the subscribers an idea in terms of maybe even a hierarchy of like, okay, these particular products are going to require a higher revenue, a higher credit score. Where would you kind of rank that, like SBA loans, equipment financing, working capital, if there was like in order from like, let's say, easiest in terms of data points to most difficult?
Yeah, absolutely. I always explain the landscape of finance as in comparison to your typical your food pyramid or any other pyramid that's out there. At the top of the pyramid, you're going to see your most sought after financing. The more traditional it's going to be, the harder to qualify, right? So when you get into like SBA lending and true bank term loans, these types of products are going to be more credit driven. They're going to be reserved more for like your 680 plus FICO borrowers. It's going to be reserved for those that have been in business for at least 2 years, have filed 2 years of tax returns, have their financials in order. And when I speak on financials, I'm talking about like profit, loss, and balance for the company. So 2 years financials, 2 years tax returns, 680 plus FICO for your traditional style financing, like your SBA and your bank term loans. From there, then we can start to look to leverage assets in the business, right? So whether it be the receivables in the business. So now you kind of come down that pyramid a little bit, and it's not going to be so focused on your time in business. It's not going to be so focused on your personal credit score. It's going to be more focused on the asset that we're looking at, right? So if you have clients in your business that pay you on net terms, net 15, net 30, net 45, that's outstanding accounts receivable. So we could look to leverage the AR. We can still secure you a revolving line of credit with a traditional APR, but it's not going to be as much of a burden on your time in business or your personal FICO, because we have that asset that we're leveraging in the receivable. And then the most frequent or the most common is your straight working capital loan, which really has no FICO requirement. Time in business can be as little as 6 months, and this is really just solely based on the revenue in the business. If you're a business that's consistently generating at least $10,000 per month in gross deposits into a business checking account, you could qualify, with a 540 FICO. We've done non-for-profits. We've done FICOs that are NA, that are not even reporting a score, and still being able to secure funding for that business solely because they had consistent revenue being driven into the business bank account.
Let's say for like a newer business that may not have revenue coming in consistently, or maybe a borrower who might, their credit score might be slightly below the threshold. Are there any products or any types of loan deals that can still be had for, let's say, less cash flow, or is there sometimes like a trade-off if maybe they have a higher credit score but not the cash flow? Is there any like wiggle room in that? For new borrowers?
Oh yeah, that's a fantastic question. I'm happy that you brought that up. We are, a proud supporter of Women in Trucking organization, and that one comes to mind right away because we've recently gotten a few deals done where there were entrepreneurs looking to get into the trucking industry that had not been in trucking before, do not have an active trucking business where they are generating revenue. So we're talking pre-revenue businesses that we've been able to finance their first truck to get them on the road and hauling, and we do that by leveraging their credit score. So it's really like a 600 FICO, so it's not even a super high credit score. 600 FICO. I would say that you should be prepared to be able to put down at least 20% of the financing amount, but again, no revenue in the business, 600, even 580 FICO, as long as you're willing to or able to put some money down on the truck, we can do equipment financing for startups that are pre-revenue. And then we also have a few other services. We've obviously partnered up very closely with you and, helping bringing education, to startup businesses on how to build their business credit and access funding through the business credit, which, you're the plug on that. Right. and then also, we're able to do some franchise loans if you're looking to buy into a franchise. Wow. We recently did a Jamba Juice. It's a juice franchise, big by us in New York. Down here too. Okay, they're out here too. And we were able to help somebody buy into a Jamba Juice franchise. They had never owned a business before, but they had a strong credit score. We were able to get them into that through an SBA loan. So when you're pre-revenue and you're trying to understand how to get into the business, there's different marketing resources that we provide to borrowers that come to us pre-revenue, credit repair services to help get their personal credit repaired to where it needs to be. So on our website, we have like a startup resource center that would push you in a few of these different directions, whether it's personal credit, business credit building, looking to purchase a piece of equipment for a startup, buy into a franchise. All businesses start as a startup, right? So it's important to us that we are providing these resources back to our startup clients, and we put a big focus on that.
Excellent. A lot of gems you just dropped there. The last question I wanted to ask, because I know we spoke about this in our earlier conversation, when it comes to like business credit, does that play a role in the underwriting process of any of the products that you work with through your different lenders? And are there any products that would help a business establish or build their business credit?
Yeah, another great question. Yeah, the premium products, right? The loans that have the longer terms, the lower cost, these types of lending institutions are going to want to take a look at your business credit, and they will make their decision based on what they see there. So it's important to have business credit and be reporting to the business credit bureaus. And these more premium style products will actually report back to the business credit bureaus for you and help you build out business credit trade lines, which is, it's kind of like the unsung hero in some of these products, because, there's so much talk about, working capital, these cash advances, they're great, they don't report to your personal credit, but, what if you're using this to build your business, right? And, let's face it, some of these unsecured loans, they are more expensive than traditional financing, right? So if you're going to leverage, what could be a little bit more expensive money, but you're going to use it to grow your business and you're paying the loan back, then you should want that reporting
Absolutely.
to your credit. I can see not wanting it to report if you're not doing the right thing, but I think many people watching this are looking to leverage these type of funding to really grow their business, and they have genuine intention to do so. So it's nice to know that some of these products that we offer, in fact, quite a few, will help you report back to your business credit and strengthen that. So when you continue to apply for financing in the future, you could continue to access more premium style products. And when I say that, I'm talking, the dollar amounts that you're approved for, the length of term in which they're willing to allow you to borrow the capital, and then obviously the golden egg, how much that money is going to cost you is always super important.
Absolutely. I say this all the time, it's if you're going to be, doing business, let's say with the lender, making these payments, why not get some of that data that will help you, in the future? So any opportunities to build business credit, personal credit, whatever the case may be, build up data points, it's only going to help you later down the road as your business might be able to seek, bigger amounts, better terms, and some more premium products. So I definitely appreciate all the information you were able to provide. If anyone's interested in seeking out services from Rock Financial, we've dropped links in the description of the video, as well as pinned in the comment section. Again, I appreciate it.
Thank you.
It's been a pleasure.
Absolutely.
Until next time, y'all take it easy, and we'll talk to you soon. Peace.